Very low interest rates coincide with wars and financial crises. Mark Carney, Governor of the Bank of England, clearly a very intelligent man. However, with most of these central bankers, what they say out in public as a representative of a central bank is maybe different to what they think on a individual level. If you're working for a central bank, if you're governor of the BOE or chair at the Fed, what you say and do in your role as a central bank, there's a certain line you have to toe. We saw this very much with Alan Greenspan. Alan Greenspan, former chair at the Fed, he has always been a sound money guy, a gold enthusiast, a sound money guy. However, as soon as he stepped up to chair at the Fed, he became a liquidity man, a money printer, a low interest rate central banker, just like the rest of them. Mark Carney, I think, is similar to Alan Greenspan in this way. Now, if you read through, if you listen to what central bankers say, often it's just nonsense, it's just bump, they're just padding stuff out, they're trying to calm the markets, they're trying to gain confidence in fiat money, which is inherently unstable. Now, this is a speech Mark Carney gave at Jackson Hole last week, the growing challenges for monetary policy in the current international monetary and financial system. It's a very boring document. I'll leave the link in the description if you want to read the full 23 pages of this document. However, I've highlighted one very interesting line out of the whole document. There's one very, very interesting line which Mark Carney says. It's highlighted here. Past instances of very low rates have tended to coincide with high-risk events such as wars, financial crises, and breaks in the monetary regime. Now, this should send the shivers down the spine of anybody who has distrust in central banks, even in corporate or retail banks, and the whole fiat monetary system, fractional reserve banking. The whole thing, this whole tower of cards, is inherently unstable. Now, recessions are a very normal part of the business cycle. You have more recessions, you have more boom and bust because of central banks, because of the fractional reserve banking. Now, this is too in-depth to go in just for this short video that I'm going to make, but do your own research, go on YouTube videos. I'll do other videos on this subject. But if you're going to have a system where liquidity expands and contracts on a large scale like it does under the fractional reserve banking system, if you have sound money, if you had a gold-backed system, you would have nowhere near the amount of boom and bust that we have in the current day. So recessions are necessary. You need recessions. If there's a period of poor investment, malinvestment, you need a recession to clear that. If people have been producing businesses and products that are now no longer needed, now the market's seen like there's not enough money, there's not enough jobs, there's just not enough demand for this huge economy we've created. Recession is a necessary part of that. The economy will contract. Businesses that aren't producing the products or services that people want, they go out of business. So you have to understand that central banks, fractional reserve banking is all part of the larger problem which creates chaos. Now, the low interest rates we have at the moment are trying to prop up this economy that needs a recession. It wants a recession. This recession is needed to clear out the bad debts, the malinvestment. We've had decades now of malinvestment. We've had the dot-com bubble, that collapsed. Then we had the housing bubble. Then we had low interest rates, even more money printing than we saw even after the dot-com bubble. Now we're in this huge bubble. This has to be cleared. But the central banks, the politicians, they don't want to face the music. They don't want the recession to come, because the recession we're going to see now is going to be bigger than the collapse of the housing bubble 07, 08. Because it's just been built bigger and bigger and bigger. So it's a huge house of cards now. So we know from, if you're a sound money person, maybe you are, maybe you're not, leave a comment in the description. Maybe if you disagree with me, if you have another monetary theory that you agree with. But the way I see it, the most simplistic way of looking at it is recessions are needed. You need sound money. If you're going to have central banks, and you're going to have more recessions. But with the central banks trying to prop up what are essentially becoming zombie economies now in the West, low interest rates not only are propping up bad debts, bad banks, bad businesses that should have gone bankrupt a long time ago. Now, Mark Carney, very insightful quote here, he's saying that these low interest rates, which history proves is correct, low interest rates, unstable monetary policy leads to wars, high-risk events, financial crises, and breaks in the monetary regime. This should be worrying for everybody. So not only are we going against capitalism, trying to prop up businesses that should have gone bankrupt a long time ago, don't be fooled into thinking this current system we have is anyway capitalistic under a central bank. If the central bank controlled the money at the very core of the capitalist system, if that's being managed from a centrally planned money supply, then it's really not capitalism at all. So don't get confused thinking this is capitalism. So we're not even going down the road of having the benefits of capitalism, higher standards of living, lower prices. Central bank stands in the way of many of those things. But now we are risking war, financial crises, potentially collapse of the fiat monetary system itself, which ultimately all fiat money collapses anyway. But very insightful quote there from Mark Carney. I thought it was very interesting that he slipped this one in there. This is what you have to do if you ever listen to central bankers speak. Sometimes I speak for 45 minutes, an hour, but you might just get one little nugget of information, something to glean from that. A lot of it's even just down to body language. When people watch the markets, they see chair at the Fed talk, governor at the BOE talk. They're even looking just for slight indications, hand movements, body language. Are they lying? How is this going to indicate on future interest rates? It's very interesting. It's a huge game of chess. But look out for this now, because I can't see it's going back to a sound monetary policy anytime soon. Can you see interest rates going back to normal levels? Historical interest rates in the UK are 6, 7, 8%. Are we going to get back to that point anytime soon? It's unlikely. It's going to be years of ultra low interest rates, more money printing. By the time you get up to interest rates of 6, 7%, who knows how high inflation is? If inflation's at 1,000% and you got interest rates at 6%, then in real terms, interest rates are still very, very low. So that's my thoughts and opinions on this one. Very interesting what Mark Carney was saying over there. So expect wars, expect financial crisis. This is the road we're committed to going down. Maybe in the future, maybe we'll all be using crypto soon. Maybe we're using gold soon. Who knows? But this fiat currency system, it's heavily flawed, guys. It's heavily flawed. So do your own research. Watch documentaries on it. I'll be doing many more videos on these central banks because I think this is the most critical problem we're facing at this time. It's not Brexit. This is this huge collapse coming in the monetary system. It's coming to the entire Western world, probably the entire globe. So it's Jason from Liberty Bunker signing off. And I'll see you in the next video.